When most small businesses think of asking for a loan, they tend to turn to the bank with which they have an existing relationship. In most cases, this is a national bank. Think Bank of America or Wells Fargo, for example. These banks offer multiple avenues of funding and tend to grant loans of larger amounts to businesses that are well established and have solid financials. Businesses who choose and qualify for lending from a national bank may receive better terms. However, because this type of lending is also heavily regulated, it has the strictest guidelines and may move somewhat slower than other lending options. The amount these types of banks lend can range from $5,000 to millions of dollars. The algorithms for loan approval vary from bank to bank, but many traditional lenders take into account both your personal and business credit profiles. Other factors can include collateral, character, and capacity. If you do pursue traditional lending, you want to make sure both your personal and business credit files are accurate and up to date. You'll also need a business plan that shows a well thought out vision of what you plan to do with the money that you are asking to borrow. Sometimes, knowing this will be a requirement in advance and can help you better determine which type of funding is right for your business. Daniel Adams, a banker at Wells Fargo, explains what they look for when reviewing a loan for approval.
Ultimately, what we look for is a good plan, a solid and reliable plan. So the guy that says, hey, from day one, I'm going to be making profit. You know what, that's not reasonable, and you don't need to put on an act for a bank or for any other lender for that matter. Be reasonable, be truthful, be transparent. And the most important thing, especially at the front end, is, well, maybe a better way to say this, what we don't like, or what hurts us, is when somebody stretches too far using either their personal resources, they max out all their credit cards, they start missing payments, and now they, instead of having no history, they have a bad history. So what we really look for is, again, a good plan, character, one of the C's of credit, but character really is measured by, do you pay your bills? So good credit history, good business credit history, good personal credit history, to make sure that, okay, what you say is what you're going to do.
Traditional banks may have stricter requirements than other types of funding. But once a bank approves a loan, most bankers usually build solid relationships with their clients and help them grow and succeed. Erin Fairbanks from Heritage Food tells us about her experience.
My name is Erin Fairbanks, and I work with Heritage Foods USA. I'm part of the wholesale team here. Patrick Martin's our founder. He was having this conversation with a friend, thinking about what did the turkey look like that maybe our great-grandparents ate, and ended up meeting this farmer, Frank Reese, who has the oldest genetic line of turkeys. Patrick committed to Frank that he would buy 800 of his turkeys to sell that Thanksgiving. So there was like a need to kind of upgrade. A colleague of Patrick's introduced him to Peter Izzo, banker with TD. They met and really hit it off. I mean, I remember Peter coming and like having pizza over at Roberta's. It was just like a natural fit. You know, we were looking to make some expansion in the business, buying some new equipment for the meat processing that we do. The relationship with Peter, he was like the person we call when we have any kind of like banking issues, but he's watching our back in other ways too. It's like, I don't have any relationship with a real person. And it's been like exciting because the company, you know, then and now, it's like always been really built on personal relationships.